Rolia, and for today's video, pag-uusapan natin ang IMF or also known as International Monetary Fund.
The International Monetary Fund, IMF, is a cooperative monetary organization whose mission is to ensure the stability of the international monetary system, the system of exchange rates and international payments that enables countries and their citizens to transact with one another. Its near global membership uniquely positions the IMF to help governments to manage the challenges posed by globalization and economic development. The key activities of the IMF can be classified under three areas: lending, surveillance, and capacity building. These activities promote policies and strategies through which members can work together to ensure a stable world financial system and sustainable economic growth. The IMF is a quota-based institution. Each member is assigned a quota based broadly on its relative economic position in the world economy. The IMF's core responsibility is to provide resources to its members experiencing actual or potential balance of payments problems, meaning that the country cannot find sufficient funding on affordable terms to meet its net international payments. Most resources for IMF loans are provided by member countries primarily through their payment of quotas. Borrowing provides a temporary supplement to quota resources and has played a critical role in enabling the IMF to meet members' needs for financial support during the global financial crisis. IMF financing is extended through arrangements that are similar to lines of credit and is based on an exchange of assets. The IMF provides financial resources to members with balance of payments problems by calling on members that are considered financially strong to provide freely usable currencies, i.e. dollar, yen, pound, euro, and renminbi. The borrowing country purchases the freely usable currencies with its own local currency, and the creditor country receives a liquid claim on the IMF, which is called a reserve tranche position. The creditor country earns interest at market rate on these claims, and they remain part of its international reserves. If the creditor country finds itself in balance of payments difficulties, it can immediately encash this claim. The IMF also extends financial assistance to low-income countries with trust resources through concessional loans and debt relief. The Special Drawing Right, SDR, serves as a unit of account for the IMF. Its value is based on a basket of currencies. As a permanent international organization, the IMF has a defined income model to cover its cost of operations, and it employs a dedicated strategy to manage its financial risks.
Why might a country go into an economic or financial crisis? Perhaps it mismanaged its economic policies. Maybe global demand for its exports, say commodities, went down rapidly, or it faced a natural disaster. As a result, the country is no longer able to pay its bills like debt payments or public sector salaries. What does the country do? The IMF was established more than 70 years ago precisely for this reason, to provide emergency financing and help countries stabilize their economies. Without such financing, the impact on the country and its people would be much worse. Countries often come to the IMF when they have no other lending options. Private investors and banks may be unwilling to risk giving money to a troubled country. The IMF provides short-term loans at an interest rate much lower than the market. It also provides zero-interest loans to poorer countries. Because IMF lending is fast and flexible, it gives countries breathing room by allowing them to meet their immediate financial needs. That breathing space gives time for new policies to have an impact. The IMF works with countries to resolve issues that led to the economic crisis in the first place in a way that puts the economy on a firmer footing, while paying attention to protecting the poor and vulnerable. These groups are typically affected the most by crises. The IMF's involvement sends a strong signal of support among private investors and banks. This helps give investors the confidence to come back and invest. Regaining this source of financing further helps the country get back on its feet. The IMF currently has lending arrangements of about $185 billion with 36 countries, enabling them to strengthen their foundations for inclusive growth that benefits all citizens.
Supply-side shortages caused in part by a build-up of container ships at ports around the world are one of the unusual aspects of the pandemic global recovery, according to the International Monetary Fund. The IMF published its World Economic Outlook on Tuesday, highlighting global inequities due in part to access to COVID-19 vaccines. It detailed how supply issues continue to create uncertainty.
What we're seeing is supply-demand mismatches that have lasted a long time because the pandemic has also lasted a long time. So while we've seen a rebound in demand, supply hasn't been able to rebound as fast, and that combination has led to high levels of inflation. We're seeing that in commodity prices, but we're also seeing that in supply chain breakdowns.
There's concern over an increase in energy prices affecting consumers, and inflation is flagged as one of the risks in the global report, with prices up substantially in some countries, including the United States. While meetings continue, the executive board of the IMF has expressed full confidence in Managing Director Kristalina Georgieva after a report that she manipulated data to appease China while at the World Bank. The IMF chief economist was asked about it at a news conference and said the IMF takes its data integrity seriously.
And as always, with any institution, including the IMF, we are constantly working to ensure the highest standards for our data and for our research and our analytical work. And as a part of that, we have ongoing reviews all the time, and we will continue to do so.
US Treasury Secretary Janet Yellen spoke with Georgieva on Monday and said the World Bank investigation raised legitimate questions and concerns, even though there's no basis for a change of leadership. So the IMF's managing director, Georgieva, keeps her leadership position, creating some stability for the institution. But the global pandemic continues to create uncertainty. The IMF is warning central banks to keep stimulus measures and to act quickly if inflation continues to rise. Caroline Malone, CGTN, Washington.
The IMF is actively involved in promoting economic growth and poverty reduction for its poorer members. If those members face balance of payments needs, the fund can provide financing on concessional terms. This financing is composed of concessional loans and special debt relief initiatives. Concessional loans are provided through the Poverty Reduction and Growth Trust, PRGT, while debt relief is currently supported under the Catastrophe Containment and Relief Trust, CCRT, and the largely completed Heavily Indebted Poor Countries, HIPC initiative. The concessional lending and debt relief operations are trust-based. The IMF acts as a trustee for all the trusts and is tasked with mobilizing and managing resources for all the concessional operations. The trust's resources are provided through contributions from the IMF, its members, donors, and bilateral creditors. The resources and records of the trust are kept separate from all other accounts of the IMF. The PRGT has been self-sustained since November 2014. This means that it has sufficient subsidy resources to meet projected demand for IMF concessional lending over the long term. In July 2009, the Executive Board approved a comprehensive reform of the IMF's concessional facilities. This reform allowed the fund to better tailor assistance to the diverse needs of low-income countries, particularly given their heightened exposure to global volatility. The underlying structure for concessional lending was simplified and consolidated into a single trust. Low-income countries now have access to a more diverse set of instruments: 3 concessional lending facilities and 1 non-financial instrument. The Extended Credit Facility, ECF, provides medium-term support for countries facing protracted balance of payments problems, while the Standby Credit Facility, SCF, provides flexible support to address short-term financing and adjustment needs. The Rapid Credit Facility, RCF, provides rapid support through a single upfront payout for countries facing urgent financing needs. These 3 lending facilities are tailored to provide flexible support and assist countries to achieve and maintain stable macroeconomic positions, with a strong emphasis on poverty alleviation. Countries seeking IMF financial assistance must indicate how a program will reduce poverty and enhance growth. Eligibility to access PRGT facilities is based on transparent and rules-based criteria and is reviewed every 2 years. In broad terms, countries are eligible if their annual income per capita is below the cut-off value for gross national income per capita of the International Development Association, and if they are unable to access international financial markets on a durable and substantial basis. Countries cease to be PRGT eligible when their per capita incomes consistently exceed established thresholds, or when they can access international financial markets on a durable and substantial basis. The interest rate mechanism sets interest rates of the 3 concessional facilities at a low level, if not at 0, and is reviewed every 2 years to preserve concessionality. PRGT interest rates range from 0 to no more than 0.75%. However, since 2009, low-income countries have been able to borrow at 0 interest rates because of the temporary interest relief on all concessional loans. Interest rates for loans under the Rapid Credit Facility, which supports countries affected by conflict or natural disaster, were set permanently to 0 in 2015. Under a revised interest rate mechanism approved in 2016, interest rates on all other facilities will remain at 0 as long as and whenever global market rates are low. Annual and cumulative limits apply to each member's total access under all concessional facilities. Total access should normally not exceed 75% of quota a year, and 225% of quota cumulatively across all concessional facilities. Low-income countries may also use the non-financial support tool, the Policy Support Instrument, PSI. This instrument can help countries that may not need or want IMF financial assistance to consolidate their economic performance with IMF monitoring and assistance. The IMF has also provided assistance on a grant basis to its poorest members for debt relief. Grants from the HIPC initiative helped to relieve the external debt burden that had become unsustainable for many low-income countries. Grants from the Catastrophe and Containment Relief Trust, CCRT, allow the IMF to provide debt relief to poor countries hit by catastrophic disasters or by epidemics with international spillover potential, such as Ebola. More than half of the IMF's lending arrangements are currently with low-income countries. The IMF supplements this lending with policy advice and capacity development.